Technology group EOH has posted a rise in its first half earnings per share, driven by organic growth and recent acquisitions. We now cross to the JSE, where John King, the company's financial director, is standing by to unpack the numbers for us. John, a very good morning to you. Thanks so much for joining us. Well, looking at these headline numbers, certainly impressive on the face of things. Revenue up 44%, HEPS up 31%, and cash sitting 70% stronger as well. Let's drill down into the business right now and where you're seeing most growth being derived. Is it still focused on the services segment of the business?
Yes, good morning, Alishia. We've seen the biggest increase in the services side of our business. We've had an increase of 58% in that particular area. But we've also seen growth in the infrastructure business of about 35% and also in the software business of about 15%. So across all the different elements of our business, we've seen growth contributing positively to that 44% increase.
Let's drill down further here because, growth is being attributed to a combination of both organic and acquisitive growth. What kind of split are we looking at between the two?
It's almost half-half, Alishia. If we just unpack the 44% exactly, just over 21% is organic and just less than 23% is as a result of acquisitions. And that's taking into account the businesses that were acquired since February last year and their contribution during the last 6 months. So it's about 50-50.
Does that mark a change in strategy for the company, John? Because, of course, when it comes to EOH's business model, it's been known to grow by acquisition, and many at a point were questioning sustainability of that kind of strategy in the long term.
In fact, it's not a change in strategy at all. In fact, over the last, ever since inception, we've had about a 50% acquisition and 50% organic growth. So it's really on both fronts, and we don't see that slowing down at all. My acquisition growth, as I said, of the 44% was about 22, 23, and organic was over 20%.
Yeah. So, okay. So we've got to focus on both. Where we are seeing some shift is also in terms of focus on private and public sector business focus. So, John, run us through that and, what kind of contribution specifically your TSS acquisition has made to that area of the business, where we know that a large part of that acquisition was based on the fact that you wanted to enhance a public sector exposure.
Yes, we have increased our exposure into government and public sector, both public sector and obviously state-owned entities. That has increased from about 15% to 25% over the last year, and most of that increase from 15 to 25% has been as a result of the managed services work that we do out of TSSMS, which is our managed services business.
Is there a threshold that you've put in terms of just how much public work you would be taking on, John? Obviously, the way that Gajima AST got burnt with regards to exposure to governmental work has put many investors out there on a tenterfoot when it comes to government exposure.
Now, I think we run about where we would like to be, run about 25%. It might increase slightly to maybe 30%. But we got our fair share of the public sector area now, so it's going to be around about that 25% threshold. We see overall that in terms of dealing with government, we don't see huge risks. It's the way that you deal with government, and obviously we can make a really valuable contribution in terms of effectiveness within public sector.
Let's take a look at outlook moving forward, because you've been operating pretty well in what has been labelled trying circumstances, and so much so that you've managed to see margins increasing in your services revenue on the services side of things, margins increasing from 9.8% to 10.9%. On the infrastructure sales side of things, margins there increasing from 5.6% to 6%. So you have managed to see some profitability filter through. So let's look at how you see the road ahead.
Well, I think just overall we are a knowledge-based business, so obviously we provide services, and obviously there is still a skill shortage, so that's an area that people are prepared to pay money for the service and the knowledge that we have to help the businesses. Just going forward, we see that we are a two-dimensional business. We have lines of business across all different areas, the consulting, the technology and the outsourcing. And we also have a vertical, industry verticals. And the idea is to obviously get even closer to our clients in terms of providing advisory services to them. We provide a lot of services in financial services, telcos, government, mining and manufacturing. So we really see EOH as wanting to contribute to South Africa and to Africa. And we believe that because of what we've got in terms of resources, know-how, knowledge, the experience to translate and organize, we can make a huge contribution. So we continue to see the future of EOH in the medium to long term as being both organically grown and also through strategic acquisitions.
Yep, but looking at that cash pile you're sitting on, I mean, a substantial cash resource that you're sitting on there, and you say to ensure sustainability to support a future growth. Let's take a look at prospects beyond South Africa's borders, John.
Yes, look, you see over the next short while that most of our growth will come from South Africa within the South African economy. But we are looking into Africa, and I think where people have made the mistake in the past in Africa is viewing Africa as a one-size-fits-all. Our view is that each country in Africa is very different, so we're looking at it a country-by-country basis, and we're looking actively at different countries within Africa, looking at what we can do in those particular areas. With the increase in broadband and the ability to connect into Africa, we see that we can make a valuable contribution in Africa, and we see growth in the future coming from Africa as well. But for the short term, still South Africa.
John, in the past you made mention of a medium-term target in terms of revenue to try and get that figure to 4 billion rand per annum by the fiscal year 2014. Are you still comfortably on track here, given roughly where you are now?
In fact, we're very comfortably on track. We're in fact probably about 18 months ahead of schedule in terms of reaching that 4 billion target. So yes, we're comfortably on track to even better that 4 billion.